So today we have the pleasure of having one of our most experienced portfolio company founders on the webinar today. He is not just building an incredible technology company, he also has decades of experience on Wall Street, which leaves him uniquely qualified to share with us his thoughts on Bitcoin ETFs. What's it mean? How should we all be thinking about it? So John, welcome to the webinar today. Thanks for coming on.
Pleasure to be here.
So, bunch of questions here, but the first thing is just what are your high level thoughts on a Bitcoin ETF being approved, whether it's by Blackrock, another financial institution, Grayscale, who's going to get approved? What's it mean?
Well, I think the BlackRock is certainly capable of getting an ETF through. They have plenty of political connections, and they're one of the biggest financial institutions in the world, especially after their success after the financial crisis in real estate and banking. They emerged almost unscathed, if not stronger from that. But in general, I would say BlackRock ETF, first of all, is not necessary. And then second of all, I would say it's going to still have trouble getting through because the SEC right now is very different than it was, say, 2 years ago. And what I mean by that is, about 2 years ago, we had the kind of peak in cryptocurrency and interest was at the very top. And then we had a 2022 that is basically like the bubble bursting in crypto. And obviously Sam Bankman-Fried's the biggest part of that at the end in November, all the way up through last week when I guess he got his sentencing. But I think the SEC's viewpoint is basically just boils down to one thing. We meaning the SEC, doesn't trust the pricing. Price discovery is pretty easy if you have a legitimate marketplace, bid-ask spread, and you have competent exchange and brokers running it. We don't have that in crypto. We have Binance, which I think has probably over 90% market share. We found out late last year that even Genesis and Gemini and Galaxy Digital and all these guys were basically sending liquidity over to Binance through, probably not such a great means, meaning like shell companies and things that are a little bit untoward.
So say more about that. What exactly are you saying about these companies, and what are the mechanics of how they would send liquidity over?
Yeah, I mean, I think what happens is if you're a provider, all these guys have their own exchanges, right? So Genesis is where I think most of the volume from large institutions went when they were doing cryptocurrency trading. And from their perspective, the customers, the financial institutions probably thought that everything was being traded on Genesis. However, Genesis doesn't govern the market. There's far higher volumes. Whether they're fake or real is hard to say, but for the most part, Binance is where kind of all prices live. And so that's going to require some arbitrage. And if you followed even Sam Bankman-Fried's early years of arbitraging Japan versus rest of world BTC trading, you quickly find out that ARB, when it's cross exchange, really means that your liquidity is also another exchange's liquidity. So something like Genesis liquidity could be essentially the same or close to the Binance liquidity.
When you say, and Genesis doesn't have an exchange, so you mean like their OTC trading desk is what you're referring to? Or
yeah, so in other words, let's say you're Genesis, right? And you're dealing with a bunch of hedge funds and VCs that buy and sell BTC or Ethereum or something in New York City. So all you see is Genesis. And what they might be doing is they would have a liquidity provider on their platform, which would look similar to you, but their liquidity provider, which would and would basically look like another customer of Genesis, might actually be a shell company controlled by CZ or his version of Alameda, and they are providing liquidity to Genesis. So that what that really means is that Binance, through whatever means is required to make it all legal for Genesis, because Genesis isn't going to break the law, they're going to meet whatever KYC AML that they can. But that gets kind of difficult when you're dealing with an offshore organization that can
Yeah.
pull a lot of different tricks and pranks.
Cool. Well, if you had to make a bet, let's say Bitcoin ETF within 1 year, uh, do you think that's more likely than not, or less likely than not to happen?
I'd rather not put it on timing. I'd rather put it on a catalyst. I think
Yeah.
for an ETF to come out, I would say Binance has to be kind of closed up. Tether has to be gone. And from that starting, and anything Justin Sun touches has to be gone. So at a very minimum, those three things would have to happen, or they would have to be minimized so much that they're no longer the main liquidity providers in crypto trading. And that would slightly legitimize it. Now, what I would say if I was the SEC, maybe they don't know this, but even the next five exchanges, OKX and Bitfinex and many others, they also kind of need to go away because none of them are really regulated the way an exchange should be regulated. These exchanges, they barely have headquarters that are known as to where they are.
Yeah.
They scoot around, and that's for good reason because the U.S. isn't going to allow a lot of things that they have not allowed in equity markets or bond markets or commodities markets for decades, if not a century. So
Let's say those things don't happen. You think no chance of there being an ETF approval?
well, I mean, look, there was that court case recently where they basically ordered, maybe it was even the Supreme Court. I didn't follow it that closely, but I know they essentially ordered the SEC to take another look at the requests.
Yeah.
Uh, Now, politics is politics, so I'm not an expert there. But I would say that if the SEC has their druthers, they're just not going to do it until they feel comfortable that the liquidity for these trading instruments are actually legitimate price moves and not wash trading and all the nonsense that goes on in the crypto Wild West.
Okay.
I'm,
Well,
I have
let's
a
say,
question,
yeah.
Zach, on that. So if I'm wondering about the perspective of like a BlackRock or the other institutions that are applying for these ETFs, do you think that they view kind of the decision making inside the SEC similarly, and they're getting in line in anticipation of, when the market kind of cleans up, will be first, or are they just totally weighing the likelihood of it being approved differently than you are?
Yeah, I think you're spot on. They are anticipating the day when it will be legal and they want to be the first one in there. I mean, look, there's only one New York Stock Exchange, there's only one CME for commodities. Exchanges tend to monopolize naturally. It's just where the liquidity goes. And right now, Binance, honestly, is basically the New York Stock Exchange for crypto. And they don't want that. But if Binance is taken down and some of their also equally suspect competitors and co-opetition partners, then I think it's pretty obvious to anybody such as a JP Morgan who's applied to do Bitcoin futures and Blackrock who's applied to do the ETF. They all know that if they're the first one in there, there's a better chance that they become the new monopoly. And an exchange generates plenty of income and is almost risk-free if you're doing it right. So it's a nice winner-take-all business that they're all going to be trying to get into if they can and secure the most liquidity. And whoever gets the most liquidity probably gets a nice golden goose at the end. So we saw a lot of this with Enron back in whatever it was, 2001, early zeros. And when Enron went down, they had a monopoly on a lot of different commodities, especially newer ones like electricity and weather. And when they made their mistake, they lost their golden goose, and sitting right there ready with a full platform, fully automated, was Intercontinental Exchange, or ICE, which became, I believe they merged into, they bought the CME, and then they end up buying, I think, either the NASDAQ or New York Stock Exchange. So they went from this tiny little, almost technology firm. They lucked out. Enron went away. They took over a bunch of really hot markets, started making tons of money, and now they're one of the biggest exchange companies in the world. So
Yeah. So I mean, in your answer, you talked about the CME, and if we roll back, I guess it's maybe, is it 6 years ago now, for when the futures launched on Bitcoin? There was a lot of talk about, hey, that's going to be really great for price and liquidity, and basically the price of Bitcoin tanked shortly after that happened. Let's say, John, because of course, if what you're saying has to happen most likely for the SEC to approve an ETF, we're probably going to see some pretty tumultuous price action in advance of that. Let's say you're wrong there and an ETF happens in a month or 2 or 3. What would you expect to happen to the price of BTC in the broader crypto markets if that were to occur?
Well, first, let me assume that the prices are less rigged than I think they are. So if that's the case, and we have something that resembles a legitimate market, then what I would expect is probably a sell-off as soon as roughly around the time the ETF happens. If people are warned as to when it's going to happen, when it's going to be announced, and it's sort of more well-known, then you'd probably want to start selling a few months before it's before it's made official. If nobody knows exactly when it's going to happen and it's a bit of a surprise, then you'd probably see the price go up on the announcement. And I think most of these guys that are holding now, waiting for this event, would be selling into that liquidity. So,
Yeah.
Do you think that's what happened in 2017, or is the timing coincidental that we had this kind of big run up to 20K and then drop down to 3 shortly after the CME futures?
no, I think it's probably one of the major causes, I would say. And I think, just because I say that prices are rigged in a lot of these bigger things, especially with Tether having around $89 billion of base liquidity, and then they borrow on top of that, I would say that the prices are probably going to do what they want in the sense that they're the biggest player. I mean, Tether is something like one of the biggest bond participants in the world. So,
Well, that's what they've alleged, that they would be the single biggest one, and not a single dealer has ever done a transaction with them.
yeah, but that's, some of that information is a little bit of FUD. I think they do own some legitimate bonds. I think
Sure.
89, their 89 billion is probably pretty close to the real number.
Yeah.
What I like to tell people is what you're looking at is the pirate's treasure chest. And that's not what the regulator should be looking at. Instead of trying to figure out that it's not backed, I think what they should be looking for is the transactions that got them there.
Yeah.
Like FTX is a perfect example. The receiver that went in after the bankruptcy went in and couldn't find any accounting. I mean, I'm sorry, I have to laugh because supposedly that company was worth $32 billion at one point, with some of the biggest names in tech, A16Z and everything in there. To pretend like they didn't have any accounting is a bit of a joke. So either there's only 2 reasons for that. One, they were so dirty the entire time that they actually didn't have accounting.
Mm-hmm.
Or 2, they had accounting, and as soon as they were about to go down, they just deleted the logs, right? Because, I mean,
Yeah.
you look at any standard FBI raid in the movies or in real life, I've seen them in real life too, in New York City, and they run in, right? The FBI agents are running as fast as they can. And back then, in the old days, you're running because you're trying to beat the paper shredder because the CEO of the dirty bucket shop is running to the back trying to put the most vital things into the paper shredder because any evidence can be used against you. So, and that's what the FBI raid is all about. So in modern times, That's much harder to be the FBI because someone could just press a button on their computer, a kill switch, and delete all the logs. And I think that's what FTX probably did. And I would say Binance and some of these other guys, Justin Sun, they have it all ready to go for the same exact thing. If they're gonna get subpoenaed and all that, they'll punch
Yeah.
out.
So tell us just a little bit, John. You preface kind of this statement saying, well, first we have to assume that prices aren't as rigged as I think that they are. How are prices rigged? Why are they rigged? How rigged are they?
Um, it's funny. I heard a very wise man in Bitcoin once say that someone asked him what his price target was for Bitcoin, and he said 1,200. And this was after it had already gone way up. So I think what he was saying was that the last time that Bitcoin price was probably legitimate was somewhere around 1,200 in 2017, right around the time of the split, the Bitcoin Cash split. I think at about that point, Tether becomes so big in after that it's really tough to trust any prices in crypto at that point. We're basically operating in a casino, and we're watching the shiny lights and the bells go off, and it is what they wanted to be. I mean, it's pretty well known at this point that the liquidity. I mean, I've done my own research on it when Solana was hot, and I realized that I couldn't even get to 5,000, 50,000 transactions a day, and they were saying it was 100 million. And basically what that is, they just set up 2 servers in a server farm, and they just throw transactions back and forth at minimal or zero fee. And it's just like your computer's talking to itself. I mean, it can make up any liquidity it wants. It's the modern era. And when these exchanges like Binance and Bitfinex and OKX, when they don't have any regulators to audit not their assets, but audit the trading and the KYC and knowing who's doing what, they can kind of get away with anything they like. So if you put your little tiny trade in, and by little, I mean even a Michael Saylor or Elon Musk putting in $1 billion worth of trades that span maybe 2 or 3 months, it's kind of like you're in a giant room that looks like a casino, but you're really the only customer there, and everybody in the casino is against you.
Yeah.
If you watch the old movie The Sting, at the final scene,
Yeah.
you realize that the entire casino is all con artists, and the only guy who's not is the mark. And that's kind of what, if I was to advise Elon Musk or Michael Saylor, I'd be like, you guys are playing in a market where you're not only just at a disadvantage, it's like you're playing blackjack against a dealer that's dealing from the bottom.
Mm-hmm.
So I don't trust any.
Yeah, how does that affect, you're obviously bullish on, one of the versions of Bitcoin. How does this affect, how you personally invest or trade?
Well, it's funny you ask that, because I haven't taken even the Bitcoin that I think is Bitcoin seriously, because in terms of the price or investing, because I can't trust anything that I see in terms of the price. So, and that's kind of borne out since I think I kind of came into the idea that I was really not looking at a real market somewhere around the summer of 2021, right before the Kleiman versus Wright case. And so, I would have loved to have traded ahead of that case because I thought he was going to win it. And I'd like to trade ahead of this one too in January because I think he's going to win it here too. But I just don't trust the market is a fair market. If it was, I think the price would go way up, and I think BTC would have a big problem. But the market is kind of what people want it to be at the moment. So until I see, I'm just like the SEC, until I see that the liquidity is no longer with a bunch of providers that I don't trust, then I don't really trust any prices I'm seeing. So my strategy is, I own some Bitcoin, and I just wait. I just have a long-term view. It's money that I don't need liquid anytime soon, and I just sit on it, and I wait for the world to start making sense a little bit.
Yeah. So back, or I guess, so you mentioned this January case. Dave, you want to give the audience a little background on the COPA trial, and then we can see what John thinks about the
Sure, yeah.
ETF. Yeah.
So we have a whole webinar on it if you want to go kind of deeper into the questions at trial in this, what we're calling COPA, and then kind of everything that's related. But on a very high level, in January 2024, so a few months, there's going to be a case in the United Kingdom of COPA, the Crypto Open Patent Alliance, which is a consortium of Meta, Michael Saylor, a bunch of different exchanges, Kraken, Coinbase, who are ostensibly trying to protect patents in the blockchain cryptocurrency space. And they're seeking a declaration from a court in the UK that Craig Wright is not Satoshi Nakamoto. So that's kind of explicitly what this trial is about. Downstream, there's kind of consequences over intellectual property that Satoshi Nakamoto would own, including the copyright on Bitcoin, the white paper, the file format, kind of some other Bitcoin related things. But first at trial is Craig Wright, Satoshi Nakamoto, where he's the defendant and then COPA is the plaintiff.
Yeah. So, John, if there's anything you want to add there, and then, what are your thoughts on how this case could potentially affect a Bitcoin ETF?
Yeah, I think Blackrock did a nice job in their filing, basically outlining that things can happen due to this court case. They mentioned the court case and Craig Stephen Wright by name, and I think they're aware that the case, they don't have any great edge on the case. I don't think a lot of people do. And so they're kind of standing back and saying, we'll reserve the right to decide what a Bitcoin is when we see how the market shapes out. And lucky for them, I think they're going to see the result of this court case before they really get approval. And that would be my best guess for the next several months. So I think, what would change if, say, Wright won the case? Well, I mean, it's hard to say, because right after that case would be more of a copyright case that would follow on immediately, and that might determine whether BTC would even be called Bitcoin, whether it had rights to the white paper, whether it would have rights to the database, and everything from an injunction, which is probably unlikely given its size, but certain things like BTC having to pay a license to BSV. And of course, there's probably going to be, stays of motions to wait for things like appeals and whatnot. But I would think it would throw a bad monkey wrench into something like a Bitcoin ETF happening, because it would throw a level of uncertainty, and investors hate uncertainty. I've seen it way too many times on much stronger things than BTC. Where just a little bit of uncertainty leads to a drop deal. So I would say if Wright loses, then I think we're just back to what we talked about before. Sure, there could be an ETF for BTC, but it would have to wait for the exchanges to have what the SEC would view as a legitimate market for price discovery.
Yeah. So kind of related to this. Oh, sorry, Dave, you got it.
Yeah, I wanted to jump into one thing on so the language that Blackrock and other ETF filers have used kind of related to COPA and Craig Wright. What kind of wiggle room are they getting themselves there? Just the ability to kind of pick, when we say Bitcoin, here's what we mean? Or what kind of is hidden in the fine print there?
For Blackrock or for the SEC?
For Blackrock.
That's hard to say. I mean, look, the risk factor is just something you almost have to do. So I don't think they're taking any strong position. I would think, like most people who are connected to these spaces, they have many friends that are interested in BTC and have no interest in Craig Wright and BSV. So I think they're probably rooting for Craig to lose. I wouldn't say that just because they put the risk factor in, they're somehow pro BSV or pro Craig, or they would have any interest in really releasing BSV. I think it would be kind of the opposite. They'd be probably afraid to do BSV right away. Maybe over time, if they saw they're going to follow the market, right? So if Craig wins and people start viewing BSV as Bitcoin, and the market starts investing money in the space and taking a look at the products and the companies in the space sector, then I think the bigger guys will just follow, right? I mean, that's why BlackRock is even here, right? They're here because BTC has achieved almost $1 trillion market cap. They're not here because they have an opinion on blockchain or they know anything about what it's for. Or I mean, mainly, I think almost all the big finance and technology people are amazingly clueless when it comes to blockchain solutions. And I don't want to get into all that, but it really just comes down to they don't really understand the scaling model, and the proof is in the pudding, right? We have all the examples we need that all 20,000 cryptocurrencies don't really scale. So, and the one that I think does scale has never really been tried at scale. So even theoretically, we might know that it scales, but we don't even know realistically if it scales. So I don't think anybody's willing to make an enormous bet right away on BSV. I think the near term action would be they would get scared of BTC if Craig won.
Do you have any opinion on this theory where it would be kind of like a hold all forks approach? I know there's been a lot of chain analysis around wallets on BCH and BSV accumulating a lot of tokens kind of publicly in one address. And there's been speculation that timing is related to an ETF. I don't know if you have looked at that or have any thoughts on that or.
I would say they'd be stupid not to do that. I mean, if BSV is essentially has a guy who's calling himself Satoshi Nakamoto and sanctioning it as the official Bitcoin. And if you were smart and that thing was trading at what it was all this year, which is 500 million to 700 million, and the other thing's trading at $500 billion to $1 trillion, you'd be kind of idiotic at the size of BlackRock to not have easily like a 10% position in BSV. So, I mean, that would be 2 million coins. So we're talking, $50 million at a minimum. That's what I would do if I was them. It would be crazy not to. It's a bet that's so small for them as to be irrelevant, and to be able to hedge out the risk that Craig is Satoshi. I don't know why you wouldn't do that. I mean, you're going to make far more than $50 million if you become the de facto ETF for whatever Bitcoin you're trying to do. So I would think they would do that, but I don't know that that's them. There's multiple, maybe a handful, not a lot, but a handful of people that could be associated with that wallet and that size of a position. So I wouldn't say it's definitely them, but I would also say that they'd be crazy if it wasn't them.
Interesting. Yeah. I know the question of what's a derivative versus what's the original Bitcoin is kind of TBD with this trial coming up, but I'm curious, just generally speaking, ETFs owning derivative assets, how does that work? What's like kind of the history there? Are ETFs able to kind of have exposure to derivatives of the asset that they're, purporting to be trading?
Yeah, I mean, I think you can get away with whatever you can get licensed, right? So you take the oil ETF. I mean, they bet on futures and they have massive contango and backwardation problems, and it's a mess. I think commodity ETFs, for the most part, are really dangerous mechanisms for both the person running it or the issuer, but also the customer. The customer rarely knows what they're dealing with when they buy something like an oil ETF. And the issuer, who definitely knows what's going on, they're not able to predict the market. So in 2020 we had the near month in oil at negative $40, and the out months out a year were like at $50. So that's a $90 range in 12 months, which is completely absurd. And of course that was due to COVID and everything, but these are the kinds of things that can happen to make an issuer frightened. So I would say that anytime you're dealing with derivatives, just think of that Warren Buffett and Charlie Munger expression, weapons of mass financial destruction, because that's kind of what they are. It's massive leverage or some other problem. And I think in Bitcoin, it won't be any different. The irony of Bitcoin is it's kind of like, it's almost better than gold and silver if it becomes money, because there really is no need for delivery of the commodity, which causes most of the problems. So in oil, delivery is the reason why in West Texas, Cushing crude got to negative $40, because nobody could take it anymore. There was no tanks open. They literally had oil that had to be shipped out of the pipelines that no one could ship. And so the people who unfortunately speculated in oil had to take delivery, which they're clearly not able to do. They're just a bunch of speculators and trading paper. And so they actually had to pay shippers to store the oil or take delivery. So that's oil, right? Oil is a big giant black liquid that's not even refined, sitting in tanks, and it's heavy. It's a tough thing to move around. Cattle futures, same thing. So any commodity, orange juice, it's all got certain problems associated with it. Bitcoin, it's like the world's most easily stored commodity. It just sits in a wallet. You can store it on a piece of paper. It costs virtually nothing to store it. The only problem with Bitcoin is the security part. As you know, if you store on a piece of paper and your baby eats it, well, you could lose, a lot of money that way. So in that respect, custody is really the only problem for Bitcoin, but it makes it unique commodity in that there's not like, I wouldn't expect there to be a contango or a backwardation of the months for the futures. There's just no reason to make it a derivative. It's basically an easily shippable commodity that goes across the world in microseconds. So that's not something that really makes any fundamental financial sense to have futures associated with it. And that's the main derivative. And of course, options will probably always crop up in anything that people trade because people love gambling. You really don't need those either. So, sure, will there be leverage on top of Bitcoin at some point? I'm sure there will, because financial people love to make money and set up gambling markets. But the reality of it is Bitcoin's a commodity that trades on information. And I think information is what's going to govern its fundamental price for the most part. So I would say any derivative, including this ETF, I just don't see why you need it. It's kind of almost moronic. If you really came down to being so concerned that you just want to make it a push button experience, you wouldn't do an ETF. You just purchase and sell your Bitcoin from a trusted broker or exchange. I don't trust Coinbase, but I mean, like, if you did, because that's the only game in town, and you thought they were quite solvent and not going to have any counterparty risk, you would use them, right? It'd be just as easy as the ETF, and you would own the actual Bitcoin, and you could read the fine print and say, I want to make sure that I actually have Bitcoin. I want it in a cold wallet stored underneath a building somewhere like gold is. And you would know that if Coinbase goes bankrupt, where you stand in line with creditors to get your assets back. Because obviously with FTX having just happened, that should be the first question on anybody's mind when they have a serious amount of assets in a cryptocurrency is, in the event of bankruptcy or counterparty risk, who gets control of the coins? In FTX's case, it certainly wasn't the customers. So,
Right. So in many ways, the purest version of a Bitcoin ETF is just a very well regulated, transparent, easy to use Bitcoin exchange. But then you can't charge as much fees, I guess, as BlackRock might want to on an ETF.
Well, you're close. I think the thing that derivatives are good for is issuers and exchanges and brokers can use that to control the market. I mean, I think that's exactly what Tether is doing, right? They can print up Tether, call it a loan. It's that part of Tether is really not backed or tracked. They can send it across the world, disrupt the prices on something like BTC, Ethereum. Currently, Solana is probably being massively manipulated. And they can create a nice story and get away with making lots of money off of suckers or marks. So, leverage is a derivative is kind of like a trick played on the customer. You don't really own the thing you think you own. And so the irony is, if you're buying gold and you're not taking delivery of the actual gold, you're not really helping out the price any, because JP Morgan can just sell you all the gold it wants on leverage and write an IOU and just say, yeah, we don't, JP Morgan can say, yeah, we don't have the gold either, but
Right.
if it goes up, we'll make you whole. And if it goes down, well, then of course we win because we're just printing out the IOU. And so, that gives them an incentive to push the price against their customers. Now, I'm not, trying to make giant allegations against, ginormous banks, but unfortunately, even modern history has proven that this is the case. I mean, we had the LIBOR scandal. Those big banks only got wrist slaps, but that's an enormous scandal, right? That should have been fully investigated down to its core, and we should have had lots of lessons learned from that. And instead, we've got governments and large financial institutions kind of in holding hands as they jump over the volcano together, and so they really aren't able to attack each other as much as they should. So there's really not as much separation of church and state as there should be in finance. And frankly, I think that's the reason why Bitcoin is here in the first place, right? What we're witnessing is a return back to the desire to have a real tradable commodity that's a hard asset. And I think that is a change that may take much longer than we hope, or it could happen very quickly. It's hard to say because it's technology, but I think that is really at the core of what is going on today. People just don't trust their large institutions in general. They don't trust financial institutions. And I think Bitcoin offers them a way to have a more hands-off relationship with their banking provider. Much easier to get control of coins, where you can determine exactly who has custody and who has the rights as creditors in your counterparty than it is in all the other stuff we're dealing with these days with fiat.
I'm curious. I have one more question, then I'll open it up to the audience. If anybody else has questions, feel free to write those in the chat or raise your hand and I can unmute you. There's often a public and a private position for a lot of the players in the space. And I'm curious what you think the private position of like a Tether is. So if you ask, if you're on like crypto Twitter, everyone's very enthusiastic about this Bitcoin ETF. They think it's going to pump their bags, make them rich. I would guess like the public position of Tether is similar because they're kind of, whenever there's like a pump narrative, they're usually stoking the fire there. Do you think privately they would be hesitant to see a Bitcoin ETF approved, or is that a good thing for Tether?
So from the standpoint of like a suburban dad who owns BTC, what do they think of Tether?
No, like what do you think Tether's position? Are they rooting for a Bitcoin ETF to be approved, or is that a threat to their kind of current position in the crypto casino? If you had to guess,
I think it's I think it's more of a threat, but more of an unknown than a threat. I think they're probably barrel-chested enough to think that they can handle anything because they have all the liquidity at the current juncture. And so they I would think that Tether views everybody as kind of a sucker, like, oh, that's nice. You're gonna have like real liquidity and actual buyers and institutions and all that. And in a way, they would view that as kind of an opportunity. Like, in other words, if you're following some of the stuff that's going on lately, what you're seeing is a flight to fiat on the part of a lot of these players because the SEC and the three-letter agencies are all on top of them. So you're seeing things like Solana is getting pumped, but then sold to retail customers and maybe institutions. And then that money is sold into Tether. And then the Tether is converted into USDC, which actually can be converted into cash. It's shipped to like a Kraken. Kraken turns it into cash. And now CZ and Justin Sun have actual fiat dollars, which are far safer than Tethers. So especially if they're getting investigated. And I think, there's a lot of direct evidence for this on the various blockchains, which is ironic because you can kind of follow some of this. But I would say Tether and Binance are kind of like that movie Catch Me If You Can. They're probably not in a 100% surety as to whether they're going to be caught or not. They probably think they have it pretty well rigged, like, maybe Sam Bankman-Fried did as well, but anything can happen. And I think as long as nothing does happen, they seem to have no fear. They keep trading this stuff, and they're making money, right? I mean, just watch that Tether market cap go up. That's the pirate chest. As that number goes up, they're making more money. So anything that gets legitimate people to buy cryptocurrency probably makes them happy, so long as they think they're going to avoid the law, avoid the regulators. So I don't know. It's a bit of an unknown for them, because how much actual liquidity would make them smaller? It's tough to say, but I don't know. I would almost ask everybody in the room what their feeling is on the opinion of cryptocurrency at this point, because maybe we haven't learned our lesson, and we're going to have another peak and people are buying in, but it sure doesn't seem like that to me. It seems like after 2022, I would think that people think pretty lowly of cryptocurrency. So I would think they'd be scared of it, and they wouldn't really care that it's an ETF. They might feel a little bit more secure because it's BlackRock or something, but I don't know.
You mean like the average Joe, what they think?
No, I mean, average Joe, institutions, everyone. You talk to a professional money manager in New York City who wasn't really into crypto prior to the crypto bubble. I mean, if you talk to pure crypto people, they'll be all for it. But if you talk to the rest of the majority of the market, I think they're probably almost think of it like they thought of .com in 2001. Like, oh, that was just a big joke bubble. All these companies are baloney, and we don't trust anything at all. I mean, it turned out that if you were going to buy Amazon or Priceline in 2001, it was a great bargain. But you didn't have a lot of them, right? Most of it was fraud and bad companies and bad ideas that just took advantage of the bubble. And I think it's no different here. So I don't know. I always have a trouble wondering whether financial players learn their lessons or not. They don't really seem to very quickly, but there is a point where they do learn the lesson, right? So,
I mean, I think a lot of people with the last bubble really lumped it in with like the meme stock phenomenon, but in a way it was almost more like AMC being wildly overvalued. An average person can look at it and be like, well, that's totally overvalued. I've seen 2 movies in the last like 4 years. Like, what is AMC doing with that market cap? But the fact that blockchain is so complex and unknown, they actually don't have that reference point of like, that seems overvalued or undervalued, because they have no idea what the underlying thing is. So they can be like, oh, well, smart people seem to think there's something here, so I'll just kind of outsource to them that there is something there. So it's almost in like a weird kind of convoluted way less risky than a meme stock, because it's not kind of prima facie a bubble.
I think you're spot on. This is my 3rd bubble in my adult lifetime while I've been serving my career. And I can say that at this point, by the time crypto arrived, anybody on Wall Street would almost believe anything somebody from Silicon Valley would tell them. Like, oh, spasm is the next big thing. They'd be like, oh, spasm, got to get some of that. Like, I mean, look at AI, right? I mean, the product is mildly interesting. I don't know that anybody knows how to monetize it quite yet. But everybody's all into it right off the bat because the wizards in Silicon Valley said it's important. And when the wizards were saying cryptocurrency was important, it was the same thing, right? I mean, people wanted to buy in. So I think at this point, it's like the boy who cried wolf, but in the other direction. Silicon Valley's been right like 3 times in a row, and they keep pushing stupider and stupider stuff at us. And now the cryptocurrency is kind of the dumbest of all of them, and yet people are still biting. So it's like they almost need a loss to teach everybody the lesson that you just can't believe everything that some wizard tells you because he says the word parsing or Schnorr diagrams or whatever they're saying, right? I mean, I know enough technology to not be BS'd by many things. besides the financial kind of experience. But like, I just see schmaltz and ridiculous stuff going on in cryptocurrency constantly. When I read the Solana white paper and they were talking about proof of time, it almost made me want to lose my lunch. I mean, it just didn't make any sense. There's really nothing behind it. So, I would hope that at some point we learn our lesson, but it does not. I think we are. Like 2022 is an example of that. But are we going to come back for more on the same topic? I don't know. I almost think we're in that post.com 2001 2002 time frame where if anything is going to emerge, it's going to be something that actually makes sense. That's a real winner, a long-term winner. And in 2001, I was there for that one. It would have been like Amazon, Priceline, Google, Expedia, that sort of thing. That were actually models that were going to work and be profitable. And I think the same is true in cryptocurrency. You can talk to other people who have different opinions on what's going to work. Obviously mine's very singular, but I think out of most bubbles does come something serious and important. And in my personal opinion, I think Bitcoin is a super huge concept, because to me, it's basically the greatest database ever built. So if you're a fan of Oracle or MongoDB or any of that stuff, I'd say this trumps all of that.
It's such an unexpected, obviously I largely agree with your outlook there, and it's such an unexpected winner to be kind of the first thing. It's like if the first website ever created was like Amazon.com, and then there was this big bubble around it, and then Amazon emerged. You wouldn't really expect it to be the first one, kind of just nailed it, and that will be the phoenix which rises from the ashes. But I think there's many reasons that could be the case. But
yeah, you wouldn't expect it, but actually, I kind of look for that. www is the internet protocol that ended up winning, but when I came around in 98, 99, AOL was still using their own proprietary protocol, the internet, and they were trying to keep you on that. And people were just, going off AOL because they wanted to go on to what they called the World Wide Web, which was a different protocol. And that's where Yahoo and Google were hanging out, and eBay. So I think this is very similar in that I find great irony in that, well, what's going to emerge out of this whole cryptocurrency bubble? It's probably going to be Bitcoin, right? But the irony is that it may not be the Bitcoin you think is called Bitcoin, but it's probably going to be Bitcoin. So, so www is one of the earliest protocols in 1991, and by the time the bubble happened, it was being standardized. And Amazon was one of the earliest, probably the earliest e-commerce company in the world, and it emerged as the biggest. So being first does count. It doesn't guarantee you're going to win, but ironically, when you stand the test of time and you kind of outlast everyone, you got a good chance.